Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to talk about the Nasdaq 100. We're going to do a review on it, and then we're going to extend it to a report. I don't have a report for the Nasdaq 100, but I have a report for the economy and U.S. stock market, and we're going to have to include it in there because I think this has broader ramification for the stock market. Once we talk about some of the things here in the review, we're going to extend and take a detailed look at this energy bill. That's the reasons why we're here. The energy build was updated today. The rest of the matrix will be fully updated tomorrow, so that's something that you'll have to keep in mind. I don't think much of it has changed, or it will change. The three time frames are down, down, and up, and we've got a downside breakout in the weekly, which means that this whole correction is deepening. We still have the primary trend is up, but there's not as much room left in the primary trend. We can see it here. The LTCO is 17. Anything below 0 creates a downside flip, so 17 is not that far from 0. We don't have that too much further to go. Continued selling. This is going to flip. The way this will be played is that I don't think it would be smart to short the primary trend flip down because this will be awfully extended at the time. We'll have to wait for a bounce within the week from the daily and then have the daily reset. And that will probably be the initial shorting position if it takes place. I don't want to look too far ahead because first the primary trend has to flip down. But it is something that becomes a possibility. And especially as we look at this energy building closer to detail, it's going to make people, well, it should be, you should be worried. There's a lot of things that are going on, the Russell Review, the other things that we've been talking about, Amazon, all things that are taking place. When you see this, if it doesn't at least raise some concern, I guess then you're just a long-term holder forever. And be careful with that. The stock market can drop for an extended period of time, especially if it gets into an air pocket, and the drop in this kind of backdrop with the cycle extension and the dividend yields, which the stock market and the economy report talks about, it's such high risk that when it goes, it runs the real risk of falling sharply down the elevator type of shaft type of stuff. The decline that we've seen is nothing in comparison to what can come. If we take a look at the sticks, we can see a little bit of a decline that's got everyone paying attention. I marked the point of which the COT's data is calculated through. This is Tuesday. We're on Friday. We haven't quite made the close yet, but it'll be coming. But the price levels are roughly the same, and I think that's important, so we'll remember that. The weekly reversals are here. I bring them up. We have yesterday's close at 1400, but you can see that the failure at 15.4 right there, that's the red line, is one of the reasons that we're falling, and we've hit an air pocket that doesn't really close until 13.4 and 13.3, so that's down in here. If this fails, then it's 1100, 11.7, and then after that it gets really bad way down here. What are the possibilities of that? Well, that really is a function of the downside movement, the alignment, and we're still fighting that to become organized. But really, it's the energy, and you can see some of that through the Pro Index here. There's a lot of selling at the professional level. We're about ready to take out the lows that were established here, and this is going to be well ahead of price. Price broke this low before, or the Pro Index, which is the red line here, broke this swing low long before price. Price just broke it. The Pro Index broke it weeks ago. Anyone who's been paying attention probably can see that. Now we're on the verge of taking out this low, and we're still well above that in terms of price. This is generating a lot of negative divergences, which suggests a lot of professional selling. And there is selling that's taking place into the decline, so be careful. I want to warn that the public is right here. That's what they're doing. The public's a day late and a dollar short. They don't recognize any of this stuff. I wouldn't be paying attention to them. This is what I'd focus on. We take out this swing low, there's going to be more selling. And you have to frame that relative to the things that we're talking about here, the reversal levels, as well as what the energy build is doing. And this is what we have. It's today's update. You can see that today's update is minus 89 and minus 51. And if you can't, I mean, I've been saying this a lot. The old shit comment keeps coming across the board. And it's either, if you're in the stock market and you're not seeing this, either you don't care or the stock market's not interesting. But even if it's not interesting and you don't play in it, these markets are all interconnected. I mean, there's enough selling that takes place in one. It's going to spill over to another. Markets, and during the periods of illiquidity, people have a tendency to sell the winners to cover train wrecks and other positions. This is another oh shit. I mean, the Russell 2000 was first to go. And I don't know how many people are paying attention to that, but this one's pretty serious as well. What's serious is that the fact that at this point in time is which this DI was created, which is not much different in price, but in comparison to last week, and we can see it here down in the DI chart, both DI and DI2 fell as price collapsed. That suggests massive distribution, and that is the reason for why you want to be saying, holy shit, you don't see this too often. There's absolutely no accumulation into this decline. If this doesn't bother you, then you don't understand what the matrix is telling us. And this is where I'm stepping in and trying to say, pay attention. This is serious business. This is distribution as price declines. This is not something that's common. It's more characteristic in situations where you have advanced declines. You might have an uptick. You might have a rally from the gurus who are telling you that, well, we're extremely oversold and we're going to get a bounce because sentiment is super pessimistic. Yeah, you're a little bit. But if you bite into that bounce and don't sell out of it under these types of readings that we're seeing, there's another hammer that's going to drop on top of your head, and that's the problem that we have. Well, I'm not sure why this is down here, but what I have here now is at this point in time, we're going to have to hit the energy and look at much closer detail, and that's why I want to end this review. It's going to get complicated at this point, so this is something much beyond what I'd like to talk about in regular reviews. If you're interested and want to keep following, jump into the economic and stock report that will continue this discussion. It will also enhance it because we talk about dividend yield cycles, which frames this risk broader term. I can't talk about this all the time. That's why these reports are being made, so I can keep a chronicle of this stuff up and running so people can cite and go back and look at it. Other than that, every time I just have to keep repeating the same message over and over again. So it just does streamline things. If you have any questions about this, if you're not sweating bullets already, if you're involved in the stock market, let me know. I'll make sure that you're at least aware of what's taking place. If you should be aware already, this is not bullish whatsoever. And when you probably watch what's coming next, you're going to be even more prepared, which you got to see what's taking place in the energy build. Thanks for watching, and until we update this again, try and enjoy your trading weekend.